Very pleasing. We can report a 23% increase in gold production to just over 20 tons of gold for the 6 months. Probably even more pleasing is this is off the base of very good operational improvements, and that reflects in a 19% increase in tons milled and a very similar yield to previous periods. In line with the restructuring that has taken place through the company, and I'll talk a little bit more about that just now. I'm also pleased to say that in terms of the cash costs, they have all come down, and in terms of the new World Gold Council measurement, our all-in costs now are approaching 375,000 Rand a kilogram. This positions us very well for a sustainable future. Based off the very solid operating results, we can see that we've seen a 63% increase in operating profit to 3.3 billion Rand. We've seen a 7-fold increase in available cash to 2.1 billion Rand, and that was by design. We've also seen 1.8 billion of net cash generated during this last 6 months. As we know, we started the period with well in excess of 4 billion Rand of debt, and I'm very pleased to say that, again, off the back of a strong operational performance, we've been able to lower our net debt by 51% to 1.9 billion Rand. It's important to just talk a little bit more about debt and dividends. The company has strategically positioned itself as a yield company, a high yield company, I should say. And essentially the basis to providing that yield is in the gold mining sector. Up until now, we've had quite restrictive debt covenants post the unbundling. I'm very pleased to say that we've been able to restructure our debt, and it's been restructured to give us more financial flexibility. The restructuring really has resulted in a 3 billion revolver and a 3 billion debt term facility. In addition, we've been able to renegotiate some of the covenants around dividends, and I'm pleased to say that the lenders have agreed to an interim dividend as long as our net debt is less than 4 billion. And of course, I've just given you that figure, and that is the case. So we are in a position to pay an interim dividend once the market has returned to stability and once wage negotiations are behind us. In terms of dividends, I think it's also important to say that if we look at our dividend policy, which uses normalized earnings, if you calculate the normalized earnings for the period under review, in other words, the last 6 months, our normalized earnings was just over 1 billion Rand. If you extrapolate that for the next 6 months and you use the dividend policy, which says between 25 and 35% of normalized earnings will be returned back to shareholders, I'm very pleased to say that at the current share price, that translates to a dividend yield in excess of 9%. That makes Sibanye one of the highest dividend yield vehicles in the industry, and that is very pleasing. The first part of the year was a portion where we focused on operational restructuring. We got back to basics. We've introduced flatter management structures. We've restructured our business by reducing excess costs, and much of that will continue into the second part of the year. What you can see from the different production profiles is that the operations have stabilized post the strikes of last year, and in particular the fire at Driefontein. And therefore, looking forward, I think that we can look forward to a total production of about 42 tons of gold for the year, and that coupled with an all-in cost of 375,000 Rand a kilogram should result in very satisfactory financial results.